Sometime last year, I finally achieved success with day trading, making thousands a day and tens of thousands per month. But then I lost it all. And this is what I learned. Day trading has been one of the OG online hustles and the one that appealed to me the most. There is no customer service, no relying on others. It's just you, the charts, and Lamborghinis, apparently.
I have my Lamborghini down here in Miami. In New York, probably gonna get a Ferrari.
Since I was into online business and didn't have great people skills, it felt like a good fit for me, so I decided to give it a try. I first got in the market around 5 years ago with $4,000. But unfortunately for me, I also got in with the mindset of a complete degenerate. There was no real plan or emotional intelligence in my trading, just vibes. So to no surprise, I lost that $4,000 pretty quickly. I may as well have joined Wall Street Bets and bought the stock with the most rocket ship emojis. That's the level my trading was at back then. But nevertheless, refusing to see my own faults, I just wrote it off and gave up on it entirely. It wasn't until years later that I decided to try it again. But this time, things were different because I had a plan. I had done what was required. Found a strategy, back tested it, made a system out of it, and I even paper traded with fake money before getting in the markets for real. Every course, every video that I saw told me that's what was required, so I did it. The strategies were profitable in the statistics, and even when demo trading, I made a profit trading them. So after a month of profitability, I got in the markets for real. Initially, things were going well. I was making a few hundred here and there, but because of compounding, well turned to really well very quickly. Prior to these moments, I had never made thousands a day in my life, and I was now doing exactly that consistently. $2,000 days, $3,000 days. It was hard to believe that this was actually happening until April of last year when things changed. My strategies had an estimated winning percentage of 63 and a risk to reward of 1 to 3, meaning I won 63% of the time, and when I did win, I made 3 times the amount of a loss. All of a sudden though, my winning percentage went from 63 to damn near 0. Almost every single trade was now a loss. A good experienced trader would realize that something is up, step back, and reassess the situation. I was not a good experienced trader. Because I wanted to believe that this was my ticket to success so badly, I kept trading until I lost all my profits, getting myself straight back to break even. I was already making plans in my head of where I'm going to travel and the things I'm going to buy, how I'm going to be working somewhere with my laptop on a beach just living the dream. The fact that I was so close and then it slipped away was a really hard pill to swallow. Now, I lost money because of my own stubbornness, so that's entirely my fault. But even that aside, why would several strategies just stop working? My backtest had a pretty large sample size that spanned years. All of a sudden, now that I get in the markets, things that were working for years prior just stop working? Spoiler alert. Yes, but even on top of that, every course, every guru, every video that I watched told me the things that were required to succeed in trading were backtesting, forward testing, and statistics. And I did all those things, so something wasn't adding up. I was missing something, and I have now finally figured out what that is. Market cycles. The unfortunate truth is, there is no such thing as a strategy or a system that just works. The market is an ever-changing thing, and strategies, systems, all those things, they need constant tweaking to match the current market conditions. Now, I trade small cap stocks, and in small cap land, cycles and conditions change very fast, so adapting is not easy. But before we even get into that, first, we need to take a look at the overall economy. I started my trading back in 2022. And because of a certain world event that happened a few years prior, the market was in a very unique condition. People had a lot more money to invest, and as a result, a lot more liquidity got pumped into the market. This made trading during those times a lot easier than usual. Because in early 2022, the economy was in a bullish state, the cycles in small cap land look like this. Long-lasting strong cycles where things were spiking left and right with lots of range, volatility, and big big volume moves, shorter lasting neutral cycles where things were spiking but to a lesser degree, and even shorter lasting weak cycles where things just weren't moving much. What I didn't know is all my strategies required a strong cycle in order to work. They weren't profitable in the other two, but because during those times strong cycles lasted so long and weak cycles didn't, I could just afford to keep trading without knowing any of this, because the times when the conditions favored me lasted much longer, and the times when they didn't last nearly as long in comparison. So just blindly trading your strategy without knowing any of these things was still profitable, but not anymore. Starting around April of last year, the market wasn't so bullish. Inflation had now risen, and the government needed to counteract that by lowering spending. Because of this, a lot of liquidity was drained from the market. This macroeconomic change caused the cycles in small cap land to shift. Hot cycles now didn't last very long, and neutral/weak cycles lasted a lot longer. Now, since my strategies all required strong cycles in order to work, this would now explain why I was losing money. It wasn't that the strategies had stopped working, it was that the market conditions allowing them to work had now changed. So what does this all mean? It means in order to be profitable trading small cap stocks, or even any stocks for that matter, just finding a strategy that works isn't gonna cut it. No strategy just works. They only work under the right market conditions. Your job as a trader is to first figure out the macroeconomic conditions of the time. After having done that, you would need to assess how those impact small cap stocks. And after that, you will need to realize which cycle you're in and trade according to it, even if that means not trading and sitting out until the cycle is in your favor. Now, realizing which cycle is happening at what time is not an easy thing to do, especially with how fast they move in small caps. It could be a matter of days before things change, but it can be done, and here's how. It's easier to identify a weak cycle, so let's start with that. During these times, pre-market gappers aren't spiking much. At most, you'll get the odd one that's over 50%, but most of them aren't. Intraday squeezes don't happen, and if they do, they don't go very high or last very long. Stocks don't close strong on the day. They close weak, and volume is generally low. This will go on for a while until something called a black swan event happens, which is a massive spike that brings back the action, sometimes even over 1000% in a day. This is usually part of a theme. So the most recent example of this is ticker CXAI, which ran from $2 all the way to $69. Now, CXAI is an AI related stock, and because of this massive spike, a lot of other AI related stocks ran up with it. No news attached, just the fact that they were AI related was enough. So the theme bringing back the momentum and changing the cycle from cold to hot was the AI theme. After this, we started to see a lot more pre-market gappers over 50%, a lot more intraday squeezers, and a lot of stocks closing strong and continuing to be strong in after hours. These are all signs that the cycle is now hot. Stocks that have no business being up start spiking for no good reason.
Why are you running? Why are you running?
It's almost like rationality goes out the window. If you want to go long and make money on the way up, this is the time to do it. The momentum favors it. But sometimes it's after a few weeks, and sometimes after a few days, you can see things starting to cool down again. Pre-market gappers aren't absurdly high anymore. Intraday squeezes don't happen all that often, and stocks aren't mostly closing strong anymore. These are all signs that the cycle has shifted into neutral. After this, things cool down even more, and we go back to a weak cycle which has the conditions that I mentioned before, and this whole thing just keeps repeating. Keep in mind, this cycle variable is really hard to backtest. It's much easier showing up every day, looking at things live, and accounting for cycles that way. But if you do want to backtest it, or are unsure what to look for when you're showing up every day, these are the things to look out for. You can pause this video, make note of them, and hopefully it helps you in your trading. I know it definitely helped me in mine. Hope you enjoyed the video, and I'd love to see you in the next one. Peace.